Welcome to Illuminati Silver's Inner Sanctum, where we tell you the truth about precious metals, finance, economics, and politics. Today is Monday, the 22nd of July 2019, and we're alerting members that the stock market may have yet a little further to run. And yes, that's upwards. On Friday the 12th of July, we published a video for Inner Sanctum members entitled, quote, Dow hits record high and why it was to be expected, unquote. Now, if you haven't heard that video, then we suggest most seriously that you do so, and we've provided a link in the description below. Now, having seen the Dow rise even further, hitting its all-time high of 27,359, with the Dow now standing at 27,163, some 200 points lower, one has to ask, is it just downwards from here on? Well, the answer is not necessarily, as there are a number of positive signs which can enable the Dow to even reach 28,000, and soon. And the S&P 500, which currently stands at 2,984, easily surpassing its all-time high of 3,014. We have often quoted that stocks like low interest rates. It enables companies to borrow monies for less and encourages expansion. Yes, those businesses such as banking and some financial institutions prefer higher rates. But as a whole, stock markets tend to perform better in low interest rate environments. The last 10 years should prove that point without doubt. But there are other encouraging signs too for equities. Retail sales figures announced last Tuesday showed a rise of 0.4% in June against a forecast of 0.1%. Consumer sentiment index is holding reasonably strong between 98 and 99. GDP growth is holding its head above 2% in spite of a strong dollar. Credit markets are charging the lowest insurance premiums in 12 months to ensure high-grade debt against default for 5 years. The CBOE Volatility Index, a measure of U.S. stock volatility known as the VIX, remains below 1- and 5-year averages, while traders remain net short futures on the gauge as they bet price swings will remain subdued. Although it's early days, of the 10% or so S&P 500 companies reporting so far this season, 50% of them have quoted higher earnings than expected. Hedge funds have started once again to boost their exposure to US stocks. And there is some evidence that monies are beginning to move out of money market funds as rates and therefore returns decline, and the stocks are beginning to receive the benefit. Now, we must add that all of this is predicated on the Fed not disappointing the markets on the 31st of July. And reduces interest rates by at least 0.25%, and give an indication that further cuts are on the horizon, if not immediately anticipated. Should the Fed not cut rates at all, then we may indeed see a stock market dip. But Jerome Powell, during his congressional testimonies, has given too many pointers for an immediate rate cut to pull back now. And even President Trump today has issued tweets ploughing on the pressure for the Fed to reduce rates next week. That said, it's not all plain sailing. There are economic issues which could derail all of this, and in our view, political ones too, such as Iran and China. But if these come into line, then stocks and markets will see another upward trajectory. We should remain mindful, however, as the S&P 500 has already gained 17% in the first half of this year. And even Goldman Sachs see little upside from here, stating that the S&P 500 is, quote, trading near its fair value relative to interest rates, profitability, and price to book value, unquote. Now, who are we to argue with Goldman Sachs? Disclaimer. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.